All right, everybody. So that was the notification that we're getting started. I want to welcome everybody who's joining us today to I think this is our 5th edition now of Realtors Unplugged. We're going to be talking about commercial loans today. So for all you realtors that are out there that are invited by your loan officers to come out and join us today, hopefully what we're going to try to do and accomplish from this is give you guys some information, some more tools, some more products, some more things that you can go back to when you're speaking with your clients, when you're talking with them, or you're meeting with somebody new today, that you have another option for them. So if there's a commercial deal possibly that comes across your desk, it's a good opportunity to oh, we got echoes going on. Aaron, I think that's you. So we have a good opportunity to get that out to you guys. So you can go out there, feel confident when you're talking to the next client, and also pair them up with your NEXA LO who will know all this information. So we got Aaron Shaler, then we got Prince Rashid, and of course the one and only, ever so bright and bubbly Dan Fouts, who's doing a text message right now. If you guys ever wonder what people are doing, yeah, he's writing a text message. So we're good to go, guys. Aaron, Prince, everyone wants to jump in first. Why don't you guys tell us a little bit about commercial deals, commercial loans, and how we can help our realtor partners out there, promote them and find these deals. Oh, I think you got to mute yourself, Aaron.
Hey, everybody. Thanks for joining today. Prince and I, as well as Matt and Dan, are really happy that you're here. Prince and I are the commercial lending division of NEXA Mortgage as far as LO support. However, all of the LOs that invited you today have access to all of these loan programs that we're going to talk about today. Commercial lending or business lending, just depending on how you want to describe it, is really multifaceted, and there's no one size fits all program. There are a lot of different lending tools out there that we have access to through the SBA, the Small Business Association. We have about 3 different programs through the Small Business Association that we can offer, as well as hundreds, literally, of other types of commercial lending products that we could help you and your clients out with. Just as an example, right now, Prince and I are working on 2 different commercial horse farm purchases. We're working on a self-storage unit. We have a couple car washes. I think that there is a assisted living facility that just came across our desk today. So those are just examples of the different types of businesses that can, be lent to, or a loan that can be used to purchase that type of facility or business.
One of the questions that I think comes to mind first for a lot of people is, how do you differentiate? How do you decide whether this is a commercial deal or this is a residential? Like, I think that a lot of times that's what happens in the decision-making process, is that very first step. So take us through that so that we can give the realtors on the call more knowledge on how to differentiate what that's going to be and stuff.
Oh, absolutely. So for commercial, as far as residential goes, commercial is any 5 units or more. So if you have a 1 unit, 2 unit, 3 unit, 4 unit building, that's all going to be residential. Anything 5 or over, that's considered commercial, as well as mixed use properties, churches, strip malls, car washes. We have a dentist that is looking for their own practice and build out funds to start that up. So those are the different types of, I think that's the definition as far as if Prince wants to add anything on that.
Yeah, one of the other things to take a look at too is when you pull the property profiles on the potential subject properties that you're taking a look at, you're going to want to pay attention to how that building or that property is zoned. That's going to be a really good early indicator early on for us to kind of make a determination as to, based on the zoning of the property, for us to be able to figure out what's going to make the most sense in qualifying for a program.
Great point. I hadn't even as experienced as I am, I hadn't even thought of that. What about like a condo-tel?
We could do a condo-tel. Absolutely. We have, I think, 3 different lenders that we can work, direct lenders that we can work with that can help us fund a condo-tel, sorry. I always want to call it a condo hotel, but it's a condo-tel.
And that would be typically a commercial type deal, right?
That would be a commercial deal. We would typically, they would like to see something like 20% down on, depending on how many units they're purchasing. With a condo-tel, it could be one, giant, skyscraper, for example, and somebody owns 15 units in there, and we could put that under one blanket loan as a condo-tel. So 20% down, they would like to see at least, a minimum of 4 to 6 months operating capital. That means that the borrower would have, 4 to 6 months of payments in reserve when they close. And that's just to make sure that, all the debt service gets made. And they will use that rent that the owner or borrower receives as a 1-for-1. So that will, that'll eliminate the debt service.
What are some of the maximum loan amounts that we're seeing on these commercial deals? Like, is there a cap? Do we have, tell us a little bit about that. So when a realtor's out there talking to somebody, they can understand like, hey, this is something NEXA can do.
Yeah. So right now, the max that we could do is about 200 million. We don't have any deals at that right now. All of the SBA loans cap out at $5 million. And then we have other programs that we can do, anywhere from, like 5 to 20. Right now, we're seeing our average deal price or deal size around $776,000.
What's the minimum? Like, if we've talked about the max, what's the lowest that somebody can go on a project?
So it just depends on, what they're actually needing, if they're needing a line of credit, et cetera. But most banks don't want to do under 150. It just makes it just makes everything very expensive for the borrower.
Yeah, it can, right? Because commercial deals don't fall under trade and everything else and QM rules, with regards to the amount of points and stuff like that. So it can get expensive on the lower loan amounts. So, on things like that, I think we have to, take that into consideration. Not to mention, we have some bullet points behind me on the screen, right? Multiple options for financing, seasoned funds not required, all that stuff. Take us through like a couple of those. So seasoned funds not required. Like if I hit the lotto, a couple here in Gilbert, Arizona, just hit the Powerball. I think they did the lump sum for 250 million. I could take that money right away and put it in play, or what?
Absolutely. You could absolutely take that money and put it in play right away. And I hate to keep saying depending on the program, all of our SBA transactions, those are going to require seasoned funds, a minimum of 2 months. But the SBA is going to work like, the business version of Fannie and Freddie. So they're going to want to trace everything. They're going to want to see everybody on that, as a personal guarantee. And they're going to want to see that borrower has used personal assets prior to applying for business funding. But with a lot of our other programs, there is no seasoning at all. So, one of the,
Yeah. And if I may, essentially what the gist of what Aaron's trying to articulate is, we know that just like in residential, we have some borrowers, especially from the self-employed side, as far as business profit and loss, that they might take a little bit more of a write down than they would traditionally show. And SBA stands for Small Business Administration. It's a US government program, just for clarification in the comments. But we know that there's going to be case-by-case evaluations of different loan scenarios based and tailored to the business itself. So things like no tax returns, no seasoning, those are really more geared towards your financially savvy investors who may have a lot of experience in minimizing their tax liability, but can't necessarily qualify on paper for SBA just because of what they're writing off on the losses. And that's where a lot of these unique niche programs where no seasoning is required, gift funds are allowed, that kind of come into play here to give your borrower access to capital to be able to acquisition that property, and to essentially get in there and lay the brickwork for any potential future financing down the line without necessarily missing out on that opportunity.
Now, one thing I do want to make sure that everybody understands is that a couple things, just some house cleaning things real quick. If you have any questions, you can put it in the Q&A part there, the questions and answers. We'll get to those as well too. You can also raise your hand. We do have Robert Bushnell has his hand raised. It looks like it was raised from the beginning. Not sure if you actually have a question. Oh, and he lowered it. Okay, so I guess he didn't have a question. So those are the couple ways, and then you could also talk about it in the chat and stuff like that. A couple things I wanted to make sure we understand. There are big projects that are out there that work in phases, right? So like there's usually the land acquisition phase, and then there's the construction phase, and then there's the the final stage and all that stuff. How do the loans work for commercial loans on that? Is this like one loan that does all, like I'd have to send proposals for all three phases, or do I just get financing one phase at a time and then submit the other part, or how does it work?
So that is a very good question, and it can be done both ways. You could do it in phases where it would be a syndicated loan, which is the equivalent of crowdfunding, through borrowing. You're setting up a total loan, you've got your total project budget, and you're borrowing from a couple of different banks that are working, in sync to make sure that the property is, and the entire project is funded. The bank would control all of the funds in situations like that. So all of the payments made to general contractors, any of those things would be made directly as a draw from the bank by the GC. We do have, depending on the size of the project, we do have one program that would allow us to do the whole thing as one. The catch on that, on both of them actually, is that the borrower would be making interest-only payments during the build phase.
In a nutshell, there is construction financing, for lack of a better term, from a 30,000 foot level, programs that allow investors to be able to acquisition the land, finance the construction, and then come up with the overall exit financing of what they're looking to achieve, as far as it potentially being a long-term hold, or maybe even more of a bridge kind of a concept if they're just here for the build out and looking to exit the project upon completion and not necessarily hold it long-term. So a lot of this, again, is more of a case-by-case basis, but there is a lot of flexibility and autonomy, and being able to reverse engineer how your clients can get qualified, so that way we can put options and opportunities on the table and discuss with your loan officer at depth and in detail about what this scenario entails, to figure out what it would require for us to be able to get to the starting line and get that project off the ground.
Good point. We got some questions coming in through the Q&A, and a lot of the questions that I might breeze over them, because a lot of them are going to be, you're going to want to direct them to your loan officer, the person who invited you to the call, because you're going to have more information on this, and they can get with Aaron and Prince and a little bit more detail. Some of these are a little granular. Like one of the questions that came through is, what is required for church financing? As long as it fits, the mold, I don't think there's anything special required for it. But
and we do have investors for those nichier loans. We're not just limiting or relegating ourselves to just big blanket jumbo deals that are exceeding $100 million. Right. There are smaller commercial projects that are taken into consideration. The business purpose is really the crux of any type of qualification for a commercial loan, is taking a look at the business, taking a look at their operating expenses, figuring out how healthy we look on paper, and then also evaluating assets to see what we can do to evidence an ability to repay, to go down a line that will find success for the client.
Aaron, I think you were about to say something too. Is that the two things that Prince had mentioned?
Yep.
Awesome. All right. So cool. Just to recap, Prince, can you give us those two things again, those that are just the basics that you were just talking about, that just about every commercial transaction should have?
Absolutely. So at the heart of this, really, when a lot of folks come to us and they approach us about commercial loans, the crux of the qualification is really taking a look at the business as a whole, taking a look at how long they've been established, any type of business assets, how the company is structured, how the company pay structured, right? Then you're also taking into consideration the zoning type and the property type as well. And then from there, we could identify investors that essentially can take a look at it as their cup of tea, if you will, as far as interest in the potential project. And we would assist in that process, or at least point you, your loan officer, in the right direction of getting to those resources so you can get a full evaluation and to potentially get some terms out for your client to see if that's something that would work for them.
All right. And then minimum down payment, guys, what are we seeing as far as the programs go? Minimum down payments for an SBA.
Minimum 10. I always caution as a deal walks in the door to expect 20, but minimum is going to be 10.
Okay.
As long as everything else pans out as it should.
Okay. And Aaron, we're getting reports that there's some feedback in the volume, and I think it's coming from yours because I see yours lighting up. I'm going to put you on mute, and then you just have to mute yourself when you're about to answer. Cool. All right. So what are the different, another question, this is from, I'm going to murder your name, but Vipin. What are different platforms to search for commercial listings? I guess this would be very helpful for realtors. I know of there's a couple of them out there that are local here. A lot of times I'll just Google search, depending on what I'm looking for, but commercial land available, commercial zone, properties for sale. And there's usually a few sites that come up. I think earlier in the chat, somebody had put one down. Do you guys know of any, top of your head?
Similar to Zillow, LoopNet is what I find to be the most popular, whether it's going to be from, leasing commercial space to actually listing commercial property with existing structures on it. And to your point, Matt, also having land listings as well that are zoned for commercial development or mixed use.
Yeah, awesome. So great. So again, guys, and somebody, I think Drew just put it in the chat right there. Crexy, LoopNet, CoStar. I've used LoopNet a lot. That one is very good. I don't know why, just here in Arizona, that one seems to pop up with the most on there. But a couple other questions are coming through, guys. I want to try to get to the Q&A. We've got, do we do franchise financing? Is that part of the commercial?
That's something that we're going to be unearthing as kind of things progress, because that's going to be more of like a business loan acquisition itself, aside from the real estate. Not something that we presently are involved in right now, but is something coming up the pipeline. But anybody with any type of, contributions as far as vendors or potential lender partners that kind of fit that mold that maybe you've even worked with in the past, we're more than open to kind of take a look at those investors and see if they could be a potential fit to help our Nexans here, secure financing for their clients.
Okay. Awesome. We're going to go through some more of them. So a couple other questions that came through. Container home communities. Is that the community? Does that count as a commercial?
When you say container home, do you mean mobile or manufactured homes, or?
It's more of a new concept that's emerging. It's actually taking reused containers and essentially using like a tiny home concept. I haven't found any investors yet, and we're still early on in our transition here, and there will be more to come as we kind of dig deeper into these scenarios as they come. But I am aware of a handful of investors that do container home financing. It's just a matter of us, kind of reverse engineering the qualification to better pass that information along to our real estate agent partners and our loan officers so they know how that financing is set up. Because with some, they're looking for land acquisition and the container home build is what I'm finding. So that's another kind of piece of the wheel that we're looking for. But I wouldn't limit our scope to any particular business. It's really more so us kind of coming in and having a chat with your loan officer to figure out what the crux of the business is. Let's evaluate the profit and loss and figure out if we can't go a traditional route on paper like SBA, what non-traditional funding outlets do we have available to us that could fit the mold as far as the acquisition or the purchase that they're looking to do, or even refinancing for that matter.
All right. Some of these questions that we have are a little like granular, like what's needed to purchase an office building price that's 165. reach out to your LO and they can answer that for you. I mean, obviously you need to meet the minimum down payment requirement, probably at least 10%, stuff like that. So there's some of the questions are a little granular. You're going to want to go back to your loan officer and ask them on some of those questions. We do have somebody with a hand up. Looks like Saeed has a hand up. I'm going to go ahead and bring you in so that you can ask your question, Saeed, and unmute yourself. So what do we got for you?
Yes, thanks for having this commercial deal right
Mhm.
here to begin with. And I would like to know how you're setting this in NEXA for a loan officer.
What was that again? I
Like
lost
for
it.
instance, I'm having a case. I have a purchaser.
Mhm.
Okay, how I can use that with you all, with Aaron and Prince.
Yeah, so
Yeah.
Saeed, you could always walk in. We will be formalizing our LO support Zoom hours to be able to answer this very question. So stop in when you have a moment. We'd be more than happy to help. But the short of it is that what we're doing here in the commercial division is improving and making more efficient the shopping process, because we've all been aware and we've all had the experience of working with commercial lenders or even being at retail lenders that have the ability to go commercial. But we always run into roadblocks, and the process itself doesn't necessarily play itself out the way we imagine it, just because of so many moving parts. So in short, you definitely want to stop in and have a chat with us just to kind of take a look at the business that you're trying to secure funding for, and we can better assist you at that point. But all the lenders that we use here in LO Support, all of our loan officers have access to the very same account executives, product offerings, matrices. What Aaron and I are really doing is formalizing that process, improving our investor relationships, and courting other investor relationships that better fit and align with what NEXA is moving towards, and assisting our independent loan officers make this adjustment in this market to be able to go after business that other, shops, quite frankly, can't necessarily handle.
Yeah. So to kind of answer that really quickly, you log in, get with your loan officer who invited you to the web call today to learn more about it. They've got access to all this stuff too. So awesome. Thank you. Thank you for the question. A couple other things coming in, guys. Again, there's somebody want to reiterate the maximum amount. I think we set up to 200 million is what we have access to in most of our projects. So again, work with your loan officer, because not every project might qualify to go up that high depending on what it is. So get with your loan officer who invited you, and they can go over that as well too. And then let's see, balloon payments. So is that something that's common in this, balloon payments? Have you guys seen that with a lot of the lending?
It depends. Sometimes, yes. So typically, if you're buying an apartment building, it'll be something like a 25-year loan amortized over 30, and the first 5 are interest only. So that means that year 25, it's a balloon payment. Often, depending on the type of transaction and project, you're going to be refinancing that business or that building in 5 to 10 years anyway. So most lenders never actually experience the balloon payment.
It's not, it sounds like there's a lot of options there.
Yeah.
Great question out of one of our people in the Q&A. They wanted to know, obviously this person's a realtor and they meet with clients all the time. They mainly do residential. They want to speak with more confidence in the commercial arena and all that stuff, as far as offering what to offer on commercial. Do you guys have any guidance? I know we're not realtors, so it's kind of hard for us to provide guidance on what the borrower should offer. I would say the negotiation, I can go off my personal experience when we were looking at purchasing a commercial building, and we still did our market research. We still were able to look at what other stuff in the area was going for, and we were still able to come in and negotiate. So do you guys see a lot of that? Do you guys have any feedback on that, on what? I think it's whatever you think is fair, right? You offer.
Absolutely. They definitely want to work with their real estate professional, but they also want to work in conjunction with their loan officer to kind of figure out where those sweet spots are going to be in the negotiation to make certain things happen. What I find, especially when you go above 5 units, between 5 and 8 on the commercial side, a lot of investors run into issues in securing that financing because most financial outlets require some type of traditional qualification, which, when we take a look at taxes and write-offs and things like that, sometimes that might not be the most viable option. One of my favorite things to promote is essentially similar to a commercial DSCR loan, if you will, in that 5 to 8 kind of category that really takes the headache out of qualifying and just qualifying off the rent rolls without necessarily showing taxes and things like that, going off of the appraisal rent comp schedule that they provide after they complete their inspection.
I 100%. Sorry, man, go ahead.
No, go.
I was just saying, I 100% agree with Prince. Also use your loan officer and Prince and I as a resource. The lender is also going to put a price tag on what they believe that building is worth prior or during appraisal time. So use us. We can help them evaluate, that price point, at least from a lending standpoint.
Good point, guys. We got about 4 minutes to go. I definitely want to get through a couple of Q&A, and then also make sure we have everybody leave with a call to action. So, guys, your call to action on these is to reach out to the loan officer who invited you to this presentation, who invited you to this class. Get with them. If when you're going out there today, our hope is that you have a little bit more confidence when you're talking to, a borrower who's like, hey, you know what? I saw this awesome building that I want to develop and I want to turn into, my next dream or whatever it is, dream business. And really having that confidence to say, you know what? I got the right guy to talk to, right? Talk to so-and-so at NEXA Mortgage. Let me get you their contact information. In fact, let me reach out for you and let's get that going. In addition, guys, we have a whole marketing team that's just waiting in the wings right now to help out our loan officers and their realtor partners to co-brand any marketing that we need for any of the Realtor Unplugged presentations that we've done, right? So we've gone through this, our 5th one now. We've done self-employed borrowers. We've done DSCR loans. We've done, one-time closes. We did cross collateralization, and now we're doing commercial deals. So if you want flyers made up, co-branded flyers, and you can get out there and really market to people, reach out with your loan officer. You guys can log in to our support and talk to somebody in marketing, get that all done up today. We don't wait, right? Business has to be done today. So with that, I'm gonna go back to a couple more questions here. Somebody had a good question. I don't know much about SBAs and the 7A guidelines or something like that, but somebody had a question regarding purchasing vacant commercial land for boat, RV, and auto storage. Does that qualify? Do we know? I don't know much about it, so I'm asking you guys to see if you guys know. It does.
It definitely has the ability to qualify. Again, it comes down to evaluating the crux to the business and being able to evidence strong financials on paper. But again, if that doesn't necessarily pencil out to be the case, we do have other options and opportunities to explore.
All right, there you go. Perfect answer. And then lastly, one of the last questions I think we're gonna try to get to right now, as far as the commercial lenders go, sometimes we're looking at something that's like partly done, right? Like somebody left in the middle of construction, right? It was like, oh my God, it got too expensive. I had to bail on this project or whatever it is. Do we have lenders that help with the rehab of that? Do we have lenders that do rehab part? And also, are they able to come in halfway through a project? If I see value in it and I want to turn that into something, do we have lenders that help us do that as well too?
Absolutely. A traditional route that I typically see a lot of folks take is usually taking the bridge route, as far as coming up with, temporary financing to secure the land itself. I've seen instances where investors will come in midstream to help pick up the project, as well as lenders taking into consideration how complete the project is up until that point. And, if it's a matter of just, we've got all the studs in the walls and we just need to basically go vertical, right? We've already laid foundation and that kind of a thing. There's definitely a potential to take a look at it. But again, it's at the lender's discretion. And these projects aren't all black and white, right? There's a lot of multifaceted moving parts in the background that we got to kind of get under the hood in. But in short, as long as we're willing to have the conversation and having an open conversation about what our needs truly are, we could definitely try to figure out a way to reverse engineer to find a solution for you.
Awesome. Guys, I want to thank everybody for joining us. I want to thank, especially you guys, Prince, Aaron, you guys are a
Certainly.
wealth of knowledge on this. I think we got a lot of good stuff out of the way. Again, loan officers and realtors, right? Loan officers, real simple. If you need to find out more information about this, we do classes all the time at NEXA for our loan officers. You could join one of those. You can log in and talk to Aaron, you can talk to Prince. Realtors, go to your loan officer. Whoever invited you to this call is going to be your key point of contact, and I'm going to market this and get this out there. Again, our hopes are to build more confidence while you're out there, while you're engaging potential clients, you know, and like we had a couple of realtors say that, you know, they mainly do residential, but they come into contact with commercial. Don't be afraid of commercial, right? It's just what we do, right? Let's go out there, win more deals, and, you know, partner up with NEXA. We're the largest broker in the country. We have the most products. We're teamed with the most lenders. We can get, you know, just about any deal done that walks through the door. We're a great partner to have on your side. So we're looking forward to some future relationships. So I want to thank Dan Fouts, Aaron, and Prince for joining us today. Again, I'm Matt Greller, president of NEXA Mortgage. And thank you guys. Thank you for joining us, and have a great day. Happy hunting.
Take care, everyone. Thank you for attending.